Guys, Bill here, and in this video I'm going to talk about using Tradietics Dealer Greeks Buildup to get swing trade and day trade ideas, how you can use them for both styles of trading in different ways. And what Dealer Greeks Buildup is it just kind of gives you a graphic representation of how dealers are exposed to the market. So whether it's Delta, Vanna, Gex, Gamma, Charm, things like this, you can easily see whether dealers are long or short, any specific ETF or stock. So right now I have SPY pulled up, and just in a simple way, let's look at how this white line, this is SPY's price, reacts to this different dealer exposure over time. So you can see that when dealers are long, which is, signified by these green bars, the longer dealers are, the price goes down. Now, obviously there's volatility, and SPY never goes down in a straight line or up in a straight line, but look at this stretch of green here and how price starts out up almost to like 470 and dips down all the way down to 380. So, like $100 move over this stretch of time, which is about 5-6 months. So, for swing trading, this is the most useful way to use this information is when you see flips from green to red and it really start to build up one way or the other, you might think about taking a long-term position, 5-6 month on your contracts and riding it out until you see a flip. So look what happened once we flipped and dealers flipped short here. So dealers were long for a long stretch of time, almost 6 months. And then it started to flip and price starts to go up. A big move from, 365 up to 430 or so, right? And then we flip green again and we're back down. So, it's crude and it's a lot of information in a long stretch of time. But the cool thing is here that you can back test stuff. So check this out. It's a simplified back test, but basically you can test whether if you buy when dealers are short, or short when they're long, what would happen? And you can do the opposite as well. But let's just try the first one. And boom, look at great returns on SPY. So 55% returns overall with an average trade of 1.5%. And so essentially what this is if you're entering a long position every time dealers are short, and holding that until you're buying commons, basically, holding that until it flips back, they flip back long, and then selling those commons and shorting the stock at every opportunity. So every time, every time you go from red to green, you flip, now it's back to red, flip, green, flip, etc. Throughout this timeline, those are your returns, okay? In profit 94.5% of the time. So that's pretty low stress, right? You're not taking a whole lot of days where you're taking red trades. And you can test this on all different kinds of stocks, and all different types of, timelines too. So that's just the standard test. You can use what's called momentum, which will start to focus more on recent price action and what's been happening with price the last so many days. 15 is the default, but you have 5, 10, 20, 30, 60. I found that SPY 20 is one of the most accurate. So look, if we go back and do the same back test, 58%. So slightly more returns than you would have got without momentum on. And you can see right now that SPY is, dealers are quite short on SPY, right? About as short as they've been in a long time, at least with the momentum on. You take the momentum off, it's a little bit different story, but definitely still short. Dealers are short, and we've been in a little bit of an uptrend recently, right? So, like I said, it's safest to use when you're taking long-term positions because there's lots of volatility. Even in this really nice, long, almost 100-point move down, look at some of the big spikes. So, if you entered a couple day trade and you're like, oh, well, look at how long dealers are, I better slap some puts here. You would have got yourself a pretty nasty loss, right? But how I do use it on day trades is just to have a little bit of a sentiment indication. Okay, so right now I see that dealers are short, so I might favor calls at certain points on the chart. So for example, let's look at SPY Friday. I knew dealers were short. They have been for a couple weeks now. And so I've been liking trades, calls off pulls to support on areas that I look for to be strong. So Friday, one of my key areas, signified here with the alert, was 390. It was a positive gamma, which is an indication of potential strong support. It's a psych level. There was also a large dark pool there. And all these things hint at support. So when we opened up here that day and we started fading down and we were coming to test this level, I was thinking, okay, let's see if it holds. And if it does, then calls would be a good trade here. As opposed to maybe if I didn't have that sentiment in mind, I might be more apt to try to take some puts as soon as we get down here, thinking we were going to dump. I mean, because you think of the economic conditions, and a lot of people are very bearish right now. They see, oh man, we're going to crush through 390. We're going to 380. The banks are, failing everything. You start to get those macro biases during day trades and it can really hurt you. But if you know the data and where dealers, are, exposed and things like this, you have a little bit more of an edge against the average retail trader. And so when price was coming down to 390, I was saying, I think I want to take calls. Let's just see how price reacts first. So what happens? Wick below, trapping bears, getting them to jump into the trade early to take puts, and then closing right back up at 390. And then look at that next candle, rip. Almost $2 up right away in 10 minutes. All right. A lot of people might not have tried to take calls there because of so many other factors. The overall sentiment in the market, the macro conditions and things like this. And that's where you can get your edge. And look how well 390 held all day. One test bounce, second test bounce, third test the best of the day. A $5 move all the way through to my next pivot, 395. So, obviously you got to have your technical analysis locked in. You need to kind of know on the chart what levels to expect to be support and resistance and things like this. But you pair that technical analysis with the data, and you can get a real big edge. So you can also look at other stocks too. Like, let's look at Tesla. Tesla's one that really respects these Greek buildups and give you crazy returns when you use them. All right. So right now, for most of the last couple weeks, dealers have been long Tesla. And what does that mean? Well, it means that you should be shorting it, right? So we see on the back test, should we buy? If we buy when it's less than 0 and short when it's over 0, this is what we get. 250% returns, 5% average return, in profit 100% of the time. That's insane, right? And you can tell by looking at the chart. It's kind of like, it's similar to SPY in that way, just way better returns. When dealers are long, you should be short. When dealers are short, you should be long. See, we get this nice red period here, move up, all this green, we're moving down. And now we're back kind of in the green, not as strong as we were in this period when Tesla really started to fail. Remember that. But it is green. So this is how you can use this tool to either swing trade, which is going to be a little bit smoother of a process. You can get bigger gains and relax, or day trade, just coming in and knowing maybe I'm going to favor this stock to move this way that day. That doesn't mean that you just blindly take a position, and it doesn't mean you can't play the opposite side, like going back to my SPY chart. If, you get all the way up to 395 off that big move down and you think, okay, well, let's short here. We might be at the top today. You would have had to hit a nice little move for $1. It doesn't mean you can't play both sides. It just might mean that you can have a little more conviction in taking calls, knowing that the price action overall environment, in the deltas is bullish. Okay. So that's how I use that tool. If you guys have any questions about it, just leave a comment, let me know, and I'll help you out.